We have more and more people in the media talking about Bitcoin, explaining what blockchain technology is, and giving subtle cues for people to consider purchasing what they can afford to lose. While at the same time, there's lots of talks of regulation, and the financial institution, the banks, are offering Bitcoin-specific financial products. And at the same time as all that, we have economists that are warning us of a crisis looming, leading to increasing inflation, rising interest rates, and a catastrophe that America isn't planning to see. There's a lot for us to talk about. Let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together we are Minting Coins, your trusted source for crypto news, interviews, and ICO reviews. Thank you for showing up. Hit that like button. It really encourages us and it helps other people find this content. Also, if you have any questions or comments, leave them in the comments box below so your voice is heard as part of the community. In today's episode, we're going to be talking about the crisis looming for not just the United States, but also the entire world. We have to worry about the perfect storm, in addition to that perfect storm being compounded by policies from the Federal Reserve, central banks, the government administration decisions, and a lot of geopolitical happenings all around the world. People are wondering what's going to be happening with Bitcoin regulation. Are they going to make Bitcoin illegal, or are they going to leave some wiggle room open so when the shoe does drop, there is some sort of support, at least for some people in the society, to access Bitcoin, cryptocurrency, things of that nature, which don't live or die by the same economic principles of these traditional financial instruments like the US dollar that we've all known and loved for hundreds of years. Well, the world is changing, money is changing, technology is changing, but economic principles are remaining the same, and it doesn't look good on the horizon, especially for people who are unaware about how the economy works, people who are not aware about what money really is, and especially for the people that are just believing the FUD and completely staying away from Bitcoin instead of recognizing that while there is great risk with Bitcoin and cryptocurrencies, the 1% that you put into Bitcoin and cryptocurrencies could be the 1% that saves you. So in the news, we're going to be starting with this article from usnews.com, and we have this one article that says, "A crisis is coming." What we have here are all of the ingredients in place for a catastrophic economic and financial market crisis. So this article is written by Desmond Latchman, an opinion contributor who has a long career as a macroeconomist, both at the IMF as well as being on Wall Street. And what Desmond goes on to say here is that by this time next year, that we will have another 2008, 2009 style global economic and financial market crisis. Very scary stuff. The 2008, 2009 financial market crisis is the birth and the genesis of why blockchain technology was able to increase its awareness and increase its adoption. People were very aware of the economic troubles that the financial system created in 2008, 2009, 2010. And because of that, they recognized that the Bitcoin blockchain and the variables, the principles, the reasons why Bitcoin exists, its properties, are the tool that can offset the control and the manipulation from the centralized financial markets. Desmond goes on to say that we have in place all the ingredients for such a crisis. And so that's the first reason why this crisis is going to be happening. And the article goes on to outline what a lot of these reasons are. We're not going to be going over all of the full article. This will be in the show notes for you to dive in and digest on your own. But first, we have all the ingredients in place for such a crisis. And second, the major economic policy mistakes by both the Federal Reserve and the U.S. administration is putting the United States economy in danger. And it puts it in danger of overheating, which is not only dangerous for the United States, but that overheating will spill over to the other parts of the world economy, creating a really difficult situation for almost everybody. So what happens is that the US dollar will experience higher levels of inflation than it's normally used to. And with this inflation increasing for the USD, that's likely going to lead to rising interest rates. When the interest rates increase, that's going to make it really difficult for people to borrow money, from businesses to borrow money. It's going to increase the cost of money, not just for businesses, which the largest cost is people's payroll, but it's also going to increase interest rates on a consumer level for people's student loans, for their home loans, for their personal loans, their auto loans. It's going to affect everybody, make everything a lot more expensive, and a lot of people are going to have some difficult times both keeping their jobs and paying the bills and the debt of which they've been piling on while money has been cheap and the economy has seemed so awesome over the past 10 years. Well, it seemed awesome because the amount of money being printed, the amount of debt being created, has been flowing through the economy and everyone's been having a good time. At some point, these levels of debt that we're experiencing are simply not sustainable. They're not sustainable because the debt has interest. Money has to be printed to pay off that interest, and the economy overall isn't generating more revenue than the amount of revenue it's going to be taking to pay off the interest on top of everything else that the government does, right? And so we have this really bad situation where inflation could be coming to America, more extreme inflation, hyperinflation even, dare we say, and that leading to the rising interest rates. Trump vowed not to run $400 billion deficits like administrations before him, like President Obama and President Bush, but instead his deficit is going to be running more than double that, over $1 trillion. That's super crazy. It's a lot of money. $1 trillion deficit in 1 year is a lot of money on an already compounding $21 trillion plus national deficit, which doesn't even say the full scope of how much debt that we're in because of the other obligations that don't get counted in the primary national debt numbers. So the Trump tax cuts have cut taxes, have decreased the amount of money that are going to be coming into the government. And at the same time that there's less money going into the government, there's going to be additional debt coming onto the balance sheet, the books of the government at the same time. All of this is going to add to the compound catastrophe that is coming down the pipelines, which a lot of people have been talking about and preparing for not just months and not just the past year or two, but for years and years. Many people have been talking about this. At some point, this will come to hit us, and it's going to hit us where it hurts. It's going to hit us in the pocketbooks. And again, we are not looking forward to this, and we're really hoping that these predictions are wrong. So in this article from money.cnn.com, other people are also hoping that these predictions are wrong. Other people in the traditional financial industry, the central banks, people like Lloyd Blankfein, the CEO of Goldman Sachs, hopes that this isn't going to happen. But at the same time, he is now stating that the odds of a bad outcome for the U.S. economy, for the world economy, have gone up. And he's worried that a spending spree by the Trump administration could overheat the economy. The same words that we're hearing from the Economist in the usnews.com page. So let's not forget, again, all of these deficits that we're creating have to be paid for. All the spending has to get paid for. And all of the spending could get paid through taxes, or if we continue cutting taxes and then continue increasing what we're spending on, then we're just increasing the debt, and people are forgetting that, hey, somehow, at some point, this debt will need to get paid for. It's backed by the United States government, the United States military, the United States economy, and though a lot of these people may be dead, when the true pain comes to the children or the children's children of the future of America, this pain is going to be coming. And so it just might so happen that we're going to be alive when the day of reckoning comes upon all of the world, and we're going to have to deal with the shitstorm that's pending ahead of us. So what could possibly go wrong? He says he hasn't felt this good since 2006, right? And then, with as well as the economy has been doing, everyone's been really, really happy. Everyone was this happy in 2006, and a couple years later, look what happened. So there's just major concerns, again, about the runaway inflation forcing the Fed to scramble in 1994 by dramatically rising interest rates more than Wall Street anticipated. Really interesting how history is repeating itself, and what happened in 1994 is the same pattern that we're seeing again. And so Blankfein said that he remembers 1994, and he said that's possible too, and that would be quite a jarring experience for the economy to not only experience the inflation, but again, the rising interest rates, which can go up more than the economy is expecting, and that can be not a positive jolt to the economy, to businesses who are concerned about economic uncertainty, who are concerned about volatility, and who are concerned about spending in times of inflation, while they'll also be worried about borrowing money with the rising interest rates. It won't look good for the stock market. It won't look good for the bond market. It won't look good for the economy overall. But it's probably safe to say that who will win will be investment vehicles like gold, even though there's a lot of manipulation with the shorting of gold. There's also probably a winner in Bitcoin and cryptocurrency, since there's never going to be more than 21 million Bitcoin, and people are going to be looking for a safe place to put their money, since stocks may be going down, since the value of the dollar may be going down, since bonds may not have as great of a return as the inflation that they'll be dealing with. There's not going to be a lot of opportunity for people to put their money. Gold and cryptocurrency is likely going to be the winner in this sort of economic event. Last little side note for this CNN Money article is that at the same time that the Treasury is going to be borrowing money to issue more bonds, those bonds are going to need to be sold. And they're going to have to get sold for the Treasury at the same time that the Federal Reserve is going to be winding down its past stimulus efforts. And so the past stimulus efforts of the Federal Reserve has been what's called quantitative easing. And what quantitative easing is simply when the Federal Reserve is taking all the money that they printed and they're purchasing stocks of these companies, bonds of the governments, different financial assets to prevent those assets from going to zero, artificially inflating the economy, holding the economy up, since that money isn't coming from the market, it's coming from the central bank to prevent those companies and those areas from completely going under. So the Federal Reserve wants to sell those assets, wants to get those assets off of their books, and winding down that stimulus, those tactics of quantitative easing. Well, at the same time, they're going to be selling those assets. The Treasury in this scenario would have to create bonds and sell those bonds, and so there's going to be a competing between the Treasury, the United States government department of the country and the people, versus the Federal Reserve, private corporation, which has a lot of power and essential authority in decision-making of money. So it's going to be really interesting to see how that comes ahead as this scenario potentially moves forward. So what's interesting here is that we have this article from ccn.com where New York Fed Economists were talking about Bitcoin's role in a centralized world. The long and short of it is that the Bitcoin and others are gearing up to compete more directly with fiat currencies in the future. But the economists are quick to argue, quoting here to say, if we lived in a dystopian world without trust, Bitcoin might dominate existing payment networks. But in this world, where people do tend to trust financial institutions to handle payments and central banks to maintain the value of money, it seems unlikely that Bitcoin could ever be convenient as existing payment means. And so they talk about the trust that centralized money has, where Bitcoin has a lot of trust because everyone can see the whole blockchain. They talk about the anonymity being a weakness when actually the anonymity is a strength for people. They talk about the validation and, between a 51% attacks, not realizing that it's much easier to hack a centralized authority, and the amount of computer energy and power to conduct a 51% attack is just mind-blowing, not to mention the fact that a 51% attack would have to be maintained at the risk of huge economic loss. And then we have the future as well, where the economists are talking about the future of cryptocurrency, making payments in a trustless environment, and they're not sure if that's a problem worth solving. Well, the whole point of Bitcoin, the whole point of blockchain technology and cryptocurrency is to solve the problem of trust in the money system, trust in the secure messaging system. A lot of people are arguing with Bitcoin and Bitcoin Cash. What's really important? Is the security of cryptocurrency really important? Is the decentralization of cryptocurrency really important? Or is it the speed or the transaction fees that are really important? Well, if you really wanted fast speeds and low transaction fees, then you could just stick with Visa. But if you cared about decentralized technology, if you cared about trust, if you cared about a system that wasn't controllable by any one group or person, then we care about the decentralized aspect of cryptocurrency, of Bitcoin, the security of the Bitcoin blockchain, and the security of the Bitcoin token. Not just the ledger, but the properties of the actual Bitcoin token as well. And that's what Bitcoin is. Bitcoin at its core is a decentralized digital coin, meaning that it was never intended to be a function of the central banks, to be a unit of accounting for the central banks. It was meant to be a unit of accounting for everyone in the world globally. And so for that reason, Bitcoin and altcoins will continue to frustrate many, many central bankers all around the world. And we keep on seeing mixed signals of this. Some countries are being pro-Bitcoin, some countries are being anti-Bitcoin. In Europe, we have a European crypto bank that aims at offering banking services to crypto investors. So this platform is planning on obtaining banking licenses in France, Italy, and Germany, while authorities in countries like France and Germany are not taking the Bitcoin boom well. They are essentially against cryptocurrencies and digital assets. Switzerland has taken the stance that they want to accept Bitcoin and cryptocurrencies and allow for Bitcoin to grow and flourish inside their economic borders. We see the same sort of legislation coming out of Spain as well, out of Russia as well. And while we keep on hearing a lot of people talking about banning Bitcoin out of South Korea, India, United States, China, what we know is that these countries are keenly aware that Bitcoin is going to help give their countries strength, help give their financial institutions and their central banks strength by them having and holding Bitcoin as a reserve currency, a new reserve currency of which America, the USD, is now. But world reserve currencies do not last forever. They typically have a shelf life of about 150 years. And then, for some reason, the country experiences this huge economic collapse that we've seen throughout history over and over and over again. It would be a little short-sighted to think that that couldn't happen in America, especially when America is one of the youngest countries in the world. So on one hand, while some people think European investors should take the opportunity from the crypto market simply while managing the risks involved, again, there's a lot of financial ministers that want to discuss the regulation of cryptocurrency before and at the upcoming G20 summit. Ministers from France, ministers from the UK, ministers from all around the world that are recognizing if they are going to regulate Bitcoin, it needs to be done at a global scale, since Bitcoin and cryptocurrency is global and borderless and exists outside the regulatory body of any one group, person, border, jurisdiction. It's a human public utility outside of government, outside of regulators. So while government and regulators can tell you what you can do as a citizen of their nation, they can't tell Bitcoin what to do. They can say, you can't use Bitcoin, it's illegal for you to use Bitcoin, it's banned here, but it's a global thing. Even if it was banned everywhere, Bitcoin will continue to exist since the economic rewards of participating in a system are much greater than the risk people are going to have to face, especially when most people around the world have nothing to lose. So real quick, out of cryptovibes.com, you might have heard about this, but central banks are so frustrated with cryptocurrency and all of the positive news coming out about cryptocurrency that a YouTuber was paid by the Polish bank, the Polish central bank, to slander Bitcoin and cryptocurrencies. So this video that was published and paid for was viewed more than 500,000 times. And you can find the link to this if you want to take a peek at it. The Bank of Poland has admitted that it carried out this campaign on the issue of virtual currencies and social media. And also it's interesting to note that this paid advertising was not disclosed in the video. So if anyone does a sponsored video, a paid video, doesn't matter if they say it's sponsored or if they don't say it's sponsored, if any part of that video is paid for, even if there's product placement, like Coca-Cola paid for there to be a Coca-Cola bottle on the table, that needs to be disclosed somewhere in the video. And if it's not disclosed in the video, in America, that could be a violation of the FTC if you're selling something like jeans or Coca-Cola or makeup. The FTC, the Federal Trade Commission, you can get in trouble for not disclosing that that's a paid ad. Well, in cryptocurrencies, because cryptocurrencies could be securities, may be securities, because from the government and the regulation side of view, they're seeing cryptocurrencies as securities. So not only are you going to be regulated by things like the FTC and the rules and the power that they have to slap huge fines on you. But you're also going to be regulated by the SEC and from the investor perspective as well. And so these things need to be disclosed. There's a lot of detailed rules about these. You can choose to ignore these rules, but there's going to be consequences to pay. There's going to be consequences to pay from the regulation side, and there's also consequences from the side of the integrity of the content creator as well. Because if someone later finds out that a video was sponsored and it wasn't disclosed that it was a sponsored video at the time, then people are going to question future content, not knowing which videos were paid for and which videos aren't paid for. We do sponsored videos here, and we really want people to watch our sponsored videos and to support the people who are supporting us. At the same time, we're not interested in saying things that we don't believe in. We're not interested in tricking people, and we're more interested with helping people with real information as opposed to anything else. All right, so to wrap up the video and to wrap up the news in the day, the White House official is letting us know that Bitcoin regulation likely will not happen anytime soon. And so this is coming out of the White House Cybersecurity Coordinator, Special Assistant to the President, Rob Joyce, and who has stated that the U.S. still has a long road ahead of it before it starts to regulate the world's first cryptocurrency. And so a couple of quotes here. Joyce said that, "I think we're still absolutely studying and understanding what the good ideas and the bad ideas in the space are. So I don't think government regulation is close. We are worried. There are benefits to the Bitcoin concept, digital cash, digital currencies, but at the same time, if you look at the way Bitcoin works, after there is a criminal attack that takes place, you can't just rewind the clock and take back that currency." And so they don't like the idea that the government can't control Bitcoin, that they can't control the blockchain, that they don't have that level of insight and power into rolling back the blockchain, which, interesting enough, is one of the reasons why the blockchain exists, because the blockchain is not supposed to be rolled back. And if any blockchain can be rolled back, then that creates a huge concern for that technology, because it shows that that technology could be controlled from a centralized source. So what we're hearing out of the White House is that they like the Bitcoin concept of digital cash and digital currencies, but they don't like the uncontrollable aspects of Bitcoin. They don't like the decentralized nature of that is inherent to the Bitcoin blockchain itself. So I wouldn't say that this is good news. I wouldn't say that this is bad news. This is a situation that a lot of countries around the world are in. And so there's no country around the world that wants to make Bitcoin just straight out illegal because of the increase in price that would automatically make for the technology. It wouldn't be instant, but over the long term, if the Bitcoin is restricted, it would hinder the growth, but it's also going to make more people covet those tokens and that technology. The opposite is also true. If Bitcoin was just full-blown legal, then a lot of people would start paying attention and just go guns blazing, seeking to get as much Bitcoin that they could, and that would also send the Bitcoin price to the moon. So these countries are realizing that any regulation that they want to enact, not to facilitate the blockchain industry, but in order to control Bitcoin while taking advantages of the blockchain industry, it's going to have to be something done coordinated on a global level, so all these countries are on the same page, especially since the economic disaster would be happening on a global level as well. This is huge game theory. Like, what if 90% of all the countries ban Bitcoin or have this crazy regulation that helps them control it, and then you have one or two countries like Russia or this country or that country that do the exact opposite and then help make blockchain technology flourish inside that part of the world. This is not an easy win for anybody involved, even for the Bitcoin and cryptocurrency advocates. This is a lot of risk with a lot of reward, and no matter what, we might end up getting both the risk and the reward. So real quickly, last but not least, to underscore what the White House is saying, CFTC chief, who we all know and love, Christopher Giancarlo, issued before the Senate Agriculture, Nutrition, Forestry Committee, said that the U.S. should tread lightly on cryptocurrency exchanges. So he's quoted here as saying, "Any proposed federal regulation of virtual currency platforms should be carefully tailored to the risks posed by relevant trading activity and enhancing efforts to prosecute fraud and manipulation." Of course, he wants to not allow bad things to happen. He goes on to say, "Appropriate federal oversight may include data reporting, capital requirements, cybersecurity standards, measures to prevent fraud and price manipulation, and anti-money laundering and know your customer protections. So they want to have all of the regulations that they know and love. He goes on to say, overall, a rational federal framework may be more effective and efficient in ensuring the integrity of the underlying market. And also remarked, we owe it to this new generation to respect their enthusiasm for virtual currencies with a thoughtful and balanced response, not a dismissive one. So again, additional people inside the government recognizing the pros and cons of cryptocurrency, recognizing that there is a legitimate need for regulation to protect people, that they're here to protect at the same time, not to just cut Bitcoin and blockchain and the cryptocurrency out, but to have a thoughtful approach of integrating these systems so more people can participate in this technology, can participate with these networks, can grow their communities, the world, the businesses, and the country, while at the same time, not just completely shutting us all out. So there is a lot happening in this world. There's a lot to pay attention to. There's a lot of distractions, and while one thing is happening, the attention of the society, of the media, is really somewhere else. What we're hearing about over and over again from lots of people, first it was business leaders, and then it was economists, and now we're hearing more and more come from actual bankers and people around the Federal Reserve as well, that a crisis may be looming. We typically have an economic correction on average every 6 to 8 years or so, and it's been over 10 years since the last major economic incident that we went through in 2008. So what we're in the middle of is the United States experiencing the longest streak of economic growth, and the Dow Jones going up and the stock market's going up and everything has been wonderful. Will everything continue to be wonderful, or is this crisis looming? Are we about to have to worry of rising inflation rates? Will the rising inflation rates lead to an increase in interest rates? And when the increase in interest rates comes about, will those be higher than what Wall Street is expecting? Will it be a jarring effect for United States businesses and people inside the country? And when that happens, will we see additional Bitcoin regulations before or after that sort of scenario is about to take place? It's going to be really interesting because I'm sure the government is looking at what happened the last time the economic crisis happened, and recognizing that this time there's going to be a lot of things different. Last time this happened, people weren't able to put their money into Bitcoin because Bitcoin didn't exist, and they must realize that when this economic crisis comes to America and to the world, a lot of people will be running toward the exits. The exits will get clogged up, and at that point it's going to be really, really difficult for anyone that already hasn't gotten into Bitcoin to get into Bitcoin. So that's pretty heavy. Take a look at these articles, read through these articles, do your own research. Don't rely on just me or just a couple people for you to get your information. Consume your own information, have your own logic, ask your questions, have your voice heard, share this information with other people so more people can help understand what's happening, can help prepare for what may be our immediate future, and can be part of the people who are helping create the path for the new direction moving forward in this new industrial blockchain order. All right, so with that being said, hit that like button. Thanks for sticking around and exploring this information with me. Let me know if you have any comments or questions in the box below. Check us out on Steemit, Patreon, or whatever social networks you like to frequent. And until next time, I'm glad that together we are minting coins.